Hello ladies and gentlemen, and welcome to the Technical Day Trader. Today we're going to be talking about Bollinger Bands created by John Bollinger. And they're basically a technical indicator overlay, meaning that they are overlaid right over top of our price data. They're also called volatility bands because they run off standard deviation, but we'll get into that in a minute. So first what we're going to do is look at the anatomy of the Bollinger Bands. Then we're going to see how volatility affects the upper and lower bands because they are reflexive. They expand and contract with price volatility. Then we're going to look at bull-bear trends, also known as walking the bands, and a few signals, mostly reversals with W bottoms and M tops. Alright, so let's get started. Okay, so here we have a chart of Under Armour, and basically what I have up here in the top left-hand corner is just a representation of what is actually the Bollinger Bands. And what I'm going to do real quick is just show you how to overlay them, and this is in my Thinkorswim application. So I'm going to go to Up to Studies, and I want Upper Studies. There they are, A to D. And there they are, Bollinger Bands SMA, Simple Moving Average. Okay, so basically there's a middle band, an upper band, and a lower band. And the middle band is just a simple 20-day moving average. And the upper band is the 20-day simple moving average, but the standard deviation of price times 2. So it uses this middle band to calculate whatever the standard deviation in the past 20 days in price. That's where that upper band will be. The same as for the lower band, but of course it's taking it's the lesser side, 2 standard deviations away from the 20-day SMA. And as you can see, price basically follows a lot within these bands. It's very hard for price to get outside of the bands because being 2 standard deviations away from the 20-day simple moving average, John Bollinger says that it should encompass as much as 87 to 89% of all price data. Now you can see some spikes and some closes above and outside of the bands, but it's very infrequent, and a lot of the time, even if it does trade outside of a band during the day, it'll close closer to the upper or lower band, and that's a great representation of just what we're looking at right here. You can see that Under Armour, I mean, there's a few days right here where it was able to close out. A lot of buying pressure. You know, it takes a very strong emotional response to be able to close outside of the Bollinger Bands in either direction, upward or downward. Alright, so here I just have a chart of Netflix, and basically what we're doing is we're looking at the Bollinger Bands again, and we're going to start to learn what exactly they do. So what I did was I put standard deviation below, trying to make it a little easier for everyone to see. And standard deviation, again, is just the amount of volatility in price. So when standard deviation goes up, that means that for whatever period we're looking back, the prices have changed a large amount. They have a high volatility. That's what volatility means. And so what you can see here is with standard deviation below it, when standard deviation is high, the Bollinger Bands, they expand. And when the standard deviation of prices begins to decrease, those bands contract, and that's why they're reflexive. And what I really did here was also show you another component of Bollinger Bands, that when standard deviation really falls off after, you know, unprecedented move, or it's just in a trading range, they'll begin to squeeze down on the price bars, and you can see that right here, and it gets squozing until, you know, the bulls or the bears win. So that's what I have indicated here, is that the blue are showing that those bands are contracting closer and closer, and eventually they explode in either direction. Now that doesn't mean it's the start of a new move, or oh my gosh, it's going to be a bullish trend. It just means that so much pressure between the bulls and the bears had been pent up, and then it explodes in one direction. And you can see that again here. The bands again contracted, and we got that squeeze, and then look at that, right when they're you know, this is actually a very squeeze, again a low standard deviation, price exploded to the upside, and that's what started the next bullish trend upward. Okay, and sometimes my application does this to me, and it basically takes my time axis and has some fun with it. So what I got to do is try to reset it. Here we go. Go to the day, And I think I had this on 4 years. Okay, so next we're going to talk about Bollinger Bands, bull walking the bands and bearishly walking the bands. Let me just bring this into focus a little bit. Okay, so he also indicated that whenever a price, or here we have candlesticks. I mean, that's the only price setting I ever use. I use candlesticks. Most traders do. And he didn't necessarily say that a move outside of the bands is necessarily an automatic reversal, but what you can take note of is that when it tags an upper or lower band, I mean, it takes a lot of buying or selling pressure to do that. So in this scenario, it's not necessarily, you can see this first tag right here. It's not necessarily saying, okay, this thing, it's overbought, it's gonna sell off. What it's saying is that price has to be justified, and what people usually do after a big bar is, the people that got in before it, they're doing a little profit taking, and the market's basically making sure that price bar is in actuality valid. And as you can see on this quick bull run right here, we had as much as 5 tags to that Bollinger Band, and immediately after those tags, you'll see that it kind of just goes sideways. Here's a tag, sideways, sideways, until it gets back to that middle band. Tags it sideways, gap up. And the same is true for a bearish band walking, is when you're getting those lower tags. I mean, that is an indication that the sellers have won, and that it's going to start a new trend. And the same thing's true though. Once it gets a tag, you'll see maybe little pops upward. People will, thinking, okay, it was just a quick stop, this thing's going to go bullish again. But again, you get another tag, a little bounce back to the 20-day simple moving average in the middle, a tag, another tag, and finally buyers came in pretty strong and were able to get out of that trend and break that trend by hitting the upper band. And then again, you can see this is another example of bullish band walking, where you can, even though it closed outside of that band, the next day it immediately sold off, and then you get a period of sideways move until you get another tag, period of sideways move, sometimes even kind of a sell-off move to the 20-day, tag, sideways. So it's also a useful tool in terms of understanding when price is going to move sideways, and possibly capital can be used better in other situations. And again, my price chart is playing around with me, so I got to reset this real quick. Let's see here. Okay, so here we're going to talk about W bottoms. And there's some rules that go along with W bottoms, and I have them actually posted right up here. And let me actually make this a little bit better like that. I also put some other indicators lower, just to see that it wasn't. This is a W bottom, meaning it should indicate a reversal. And this would be from a bearish to a bullish reversal. And so basically what happens is you have a first-hand reaction low, and that usually closes outside of the bands. Then you want to bounce back to that middle band, the 20-day simple moving average, and then another sell-off. But the second sell-off doesn't make contact with that lower band again, and that's just showing that the sentiment is changing, and bulls are starting to get control of this equity again. Buyers are coming in, basically. And it's also a show of a momentum change, and as a rule, momentum changes before price. And so I can look down at my money flow index right here, or my MACD, and see that indeed money is flowing on this second downturn. Money is flowing into the security. And also with the MACD, momentum is kind of changing. You get a little divergence there, and it's heading back positive after hitting that oversold. And the final rule is the confirmation for it to be a W bottom is you want it to break the middle of that W. You make a little trend line sideways, and what you want is for that line to become support. And when it does, you can see the final time that it bounced off that, it really took off, and there was no more sellers. People were confident that this stock was going to be going up. So now we're going to look at Bollinger Bands M tops, And it's very similar to W bottoms, but we're talking about reversals from a bullish trend to a bearish trend. And for I have the rules also written out over here, where basically what you want is the security to forge a reaction high above that upper band. We have that right here. And then prices are going to pull back down towards that 20-day simple moving average, and prices may move above the prior high, but fail to reach the upper band. Basically, you're looking for a failure to reach the upper band. They may make a higher high. It could be not a higher high, but the real focus is were they able to hit the top of that Bollinger Band again? And what that indicates, just like with W bottoms, is that there is a waning momentum. For whatever reason, the bulls are getting skittish. Bears may be taking control. Either way, the enthusiasm is not there to forge a new high, and that's what we're looking for, because again, as a rule, momentum changes before price. So, prices may move above it, but this is just a warning sign. The inability of the second reaction high right here to make a higher high, again, waning momentum, and that can foreshadow a trend reversal. So again, just like with the W bottom, we're going to look at this middle portion right here, the middle of the M, and draw a trend line from that horizontally out to the right, and that's going to be our confirmation support break. So if it sells and closes below that, that's our confirmation that the downside move is in effect. The probability of an extended downside move is definitely there. And in this scenario, you can see that there's, even after that confirmation line break, there's usually a pullback, or in this case, it would be a buying, not necessarily a pullback, but bulls come back in and try to get it back above that confirmation line to negate the M top. And you can see they actually bounced off that resistance twice before they gave up. And you can see a full-on bearish domination after they said, nope, not going to happen here. Tried to buy it up again, not going to happen there. Then everyone was selling. And also in this chart, this is Newmont Mining. I did overlay the MACD 2 lines with the standard default calculations, which is the 12 and the 26-day EMA, and then the 9-day EMA of that line. And you can see even here that after this first high was kind of a Michael Jordan high was forged right here, that started the rollover of the MACD. And if you check out the video or article on the MACD, this is a classic bearish divergence. So when it makes that second high, I'm already looking for reversal patterns, because I see that bearish divergence. I see that it used the 0 line as support just to be able to get to that second high, and now I'm looking for confirmation. And this can actually foreshadow that confirmation, just because it's hanging around that 0 line, and when it breaks through, man, all hell breaks loose. So that's pretty much it. For the Bollinger Band M tops, yeah, you can use a ton of different indicators with them. They're great for kind of providing a perspective on price data, because especially with Newmont Mining, there's a decent amount of noise going on here, but the Bollinger Bands can kind of give you, a realistic view of where price is going to be able to go. And actually, just teaching this right now, I noticed that it's not a major squeeze, but you did get a little squeeze right here on that second bullish failure to try to break that trend line. So that squeeze, that's basically locked and loaded. Once they were unable to break that resistance, that that there's going to be a bearish sentiment, and absolutely there was. Alright, so we hope you enjoyed our quick little video lesson on Bollinger Bands. We have tons of others and a lot of full in-depth articles. We hope you guys check them out. And also make sure that you look at our trading packages, which we sell on our website. They're really finite and defined, and give you the full steps to be able to implement these types of systems, and use these technical indicators to create a probability and an advantage in the marketplace when you trade. Alright, well, thank you very much, and have a good day, guys.